Hey traders, David Frost, my strategic forecast. You're here for another episode of Common Sense Market Analysis. Today is Wednesday, March 19, 2025. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? Well, before we get to what's on the docket, we have to take care of some housekeeping items. What are the housekeeping items? First, where was the video last night and why is this video coming out so late tonight? What's going on out there? Let me address what is going on. So I'm traveling with my family. We're on what's called a vacation. I haven't taken a vacation like this in years. I owe it to my family and we're doing it. So the reality is there's a time difference between where I normally am and where we are now. Also, not to add insult to injury, but we are adding insult to injury. I'm having some equipment slash computer failure type situation going on. So hopefully that will be resolved in a day or so. I'm doing the best I can to get the video out. I'm doing the best I can to get you the data that you need. So let's move on and let's take a look at the daily chart of the SPY. And what we'll do is let's backtrack to last week when the market made a bottom. We all know about that. That was on the day we talked about. It was the 13th of March. We talked about this a number of times. In fact, we talked about it for days and days and days. If you remember, and this is air quoted, we were looking for a low. We got the low. The market went up the next day. We had follow through. Yesterday, we had what's called a pullback day. There's nothing wrong with that. And today, the market had Kabuki Theater Day, where the FOMC came out with their interest rate announcement. You had Jerry's presser, all that stuff. And all in all, over the last 2 or 3 days, the market's been doing what? Eating time off the clock, going sideways. What's that doing? Well, essentially, that's building energy for the next move higher. Is the next move higher guaranteed? No, nothing in the market is guaranteed, but they are building energy for the next move higher, trying to recapture the 200-day moving average. Let's answer a question that's on everybody's mind. Can the market retest the recent lows? Anything can happen. If it didn't do it today on Kabuki Theater Day, what's going to be the catalyst to do it? Well, that's a good question. Let's answer the question. Tomorrow, Thursday, is what we call a tinfoil hat situation. Can the market turn on a tinfoil hat situation? Absolutely. Markets have a tendency to trade up or down into those events, just like it did last week. Tomorrow is called the spring equinox, falling on March 20, 2025. We call that, or I call that, a tinfoil hat event. Why? Because those people like me that believe that those events can impact things in the market typically wear a tinfoil hat. I'm one of those people. Now I'll get comments under this video about laughing at me because I believe that those events can and sometimes do have an impact on the market. You can laugh all you want. We've done this for years and years and years. Not everyone has an impact, but a lot of them have an impact. Doesn't have to be on the day, to the minute, but what happens on these events is the market, or not the market, but energy shifts from one thing to another. And I discussed this with last week's cycle. Same thing. We're shifting from one period of time to another. That's a shift in sentiment. It's a shift in energy. It's a shift in not just the market things, but it's a shift in all things. It's an energy shift in our lives, shift in geopolitical events, shift in economic events, shift in war cycle events, all kinds of things can have an impact around these tinfoil hat events. If I were you, I would write that down, put it on a sticky note. Let's move over to inside the numbers and just take a gander at what happened today with some of the numbers. I think you'll find this very interesting. Why? Because when we have specific numbers that have meaning and the market is attracted to those numbers, the market reacts at or from those numbers. We know those numbers have importance, and therefore into the future, we want to pay attention to what's called important numbers. Where do you get the important numbers? You get them right here. I'm in the important number business. We have a pivot. The bull variety is 562.80. Now, this is put on the board at 0 dark 30. What does that mean? Long before the market even opens for business, I'm telling my members that are inside the number and live room members that 562.80 is a bull pivot. What does that mean? It means simply, and here's the chart, it means simply above that number, and here's the green line down there, 562.80. Above that number, she's bullish. Below that number, she's not. She is the market. By way of the arrows, you can see what's going on. Early on, the market's struggling with it, finally gets above, comes back to test it in the afternoon. We can see that. She tests it almost to the penny in the afternoon. And then on Kabuki Theater, a little misdirection, shakeout operation, and she takes off to the upside. And here's where the interesting thing occurs. So she takes off to the upside, and the Fed is responsible for the move, as everybody would believe. But how could you possibly know where the market's going after the Fed? How could you possibly come up with a number where the market's going to go as a target and stop and reverse on the Fed announcement? How could you possibly do that? Well, let's fast forward. You can pause the video, read the notes, go back to the chart, and double check the work. But what I want you to do is pay attention to a certain number that was put up on the board, and these are also put up as support and resistance numbers in the table of numbers that we have downstairs. Now, here's that table of numbers I just referenced. This is put up on the board for members of Inside the Number and live room members each and every day. And look at the resistance number 4, which is the last resistance that was put up on the board this morning. Again, 0 dark 30. In fact, it was put up on the board last night, 570.90. Now, let's just take this at face value. The blue line across the top of the screen represents what? 570.90. What does that also represent? High of day. What was the exact high of day? 570.95. We're not going to split hairs over a nickel. How do you do that? How do you nail the high of day? How do you nail a resistance number last night, knowing the Fed / Kabuki Theater is coming out with their stuff and the market's going to whip around? How do you know where the market's going to stop? How do you know where a target is? How can you possibly put these numbers up on the board? We've been doing this for years and years and years, and we're going to continue to do this type of work. 570.90, write it down, put it on a sticky note. How do you possibly do that? 562.80 was the bull pivot. Above, she's bullish. We had numbers in between. Doesn't matter. You get the point. Heed the information. If you're a trader, if you're trading the S&P during the trading day, whether it's options on the S&P, the ES, the MES, exchange traded products, it doesn't know. It pays to come over to Inside the Numbers and get the data that can make you successful each and every day. Just a word to the wise. What's going on over in Camp IWM? Before we do that, let's just go over to the Lazy Swing Trader Automagical Algo system and point out something interesting, because the system had an entry at 176.42 for Texas Instruments, and today we achieved the base hit up here and a little bit of a stall out. That's common, normal garden variety activity. But what this did was it put a base hit in our pocket and it turned the trade into a risk-free, emotionless trade. Lazy Swing Trader Automagical Algo system produces trade after trade after trade after trade, regardless of which way the market's going. That's the design of the system. It's an algorithm built by me. If you think I know how to get the numbers, then you must believe that I know how to put the numbers in an algorithm. Wouldn't you think? The hard part was getting a developer to put the whole thing together, which is done, and it works like a charm. How you doing? Now back to Camp IWM. No different than the spiders creeping up to the underside of the 20-period moving average bottom last week with all the rest of the markets. Again, there's more upside in these markets. Can they test the low? Anything is possible. The reality is there should be more upside in these markets. I know it's hard to believe. People want to think there's a crash coming. They always want to think there's a crash coming. There is a crash coming at some point in the future. Just my belief is it's not now. It's all the same market, IWM, SPY. They don't all go up to the same magnitude. Everything's a little different, but they're all trading in tandem together at present. My favorite market leading indicator, Camp IWM, the small cap space. What about my second favorite market leading indicator, the folks down at the transportation department? So they bottomed at a number on time, like everything else. And what are they doing now? They're eating time off the clock, going sideways, building energy for a move higher. But you'll notice this is struggling to really get up off the mat. So this could be and is my favorite canary in the coal mine. If the transports are going to roll over, you're going to see the rest of the markets roll over. This would be a good tell to watch. Do we find anything different with the Q people? Not really. Qs are up $6 today. Similar to the spiders, the chart almost looks identical. We're not going to make a federal case out of it. It's a similar chart. They got a bounce last week, and we'll see what happens with the equinox or tinfoil hat event coming tomorrow and shortly thereafter. Again, no turn expected or has to happen tomorrow. Can happen, but we're shifting into another energy field, if you will. How about the financial sector? Pretty good bounce for the financial sector, right into the convergence of the 100 period and 20 period moving average. They never did get down to this 4660 number that I had my eye on, so we'll take that off the screen. But this is a pretty good bounce for the financials, and we know how I feel about the financials. If the financials are falling apart, it's likely the structure of the underlying of the market has damage. But if the financials are doing okay, then there's unlikely any damage to the underlying structure of the market. I would write that down, put it on a sticky note. How about the semi space? We know the semis bottomed a little bit before the rest of the market. That was a proxy for the tech space. The semis are also a good proxy for the tech space at any point in time. So if they're bottoming or topping before the rest of the market does, you want to pay attention to that. If we're expecting a turn, we were expecting a turn. We looked at the semis. We noticed they were bottoming ahead of time. They started bouncing before everything else, and that was a pretty good proxy for everything else. So now they're eating time off the clock below or just underneath the 20 period moving average, building energy for what? Yeah, another move higher. One last housekeeping item. If the video sounds a little squirrely today, it's because I'm having equipment issues. I hope to get those resolved shortly. I appreciate everybody's patience, and I'm very happy that I was able to get the video out today, albeit very, very late, but out nonetheless. We're going to pull the ripcord here today. I appreciate each and every one of you. I appreciate your patience. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.